Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning, everyone. John Money McKinley here for another edition of Real Talk with Real Estate Pros. And got a lot of noise and confusion going on out there right now, and that's why we're here to bring you the truth directly from the experts who work inside the industry every single day. No headlines, hype, no clickbait, just real facts you can actually use on what's happening in the world of real estate, mortgages, and credit. I hope you find today's episode informative, and I'd really appreciate it if you could do me a favor, like, subscribe, and share with someone you know who's thinking about buying or selling real estate or just wants to get a better understanding of what's happening in this crazy market in 2025. Our mission here is really simple. We're here to empower you with real knowledge so you can make smart moves with real estate in your financial future. Today, I'm going to be joined with credit expert Greg West from West Credit Services. And trust me, you don't want to miss what Greg's bringing to the table today. With that said, I am going to bring in my co-host, Mr. Greg West. Mr. West, how are you on this fine morning?
Pretty good, bud. How are you doing? Hopefully, fixed my sound problems we've had. Got the mic closer today.
That is a good thing. You sound a little clearer. Hopefully, I'll get somebody in the chat to give us a response and say, yes, Greg sounds okay. But we've got a lot of great stuff to get into here today. And the first thing I'd really like to start with is what's going on here in the local market in Houston. We've been seeing a lot of things happening, and let me go ahead and share with you all just a little news here on real estate and how it's been moving and where things have been trending. We've seen a lot of movement over the past 6 months. We've seen a lot of movement, which is giving buyers a little more breathing room than we've had over the past couple of years, because we all know real estate since 2020 has escalated just to unheard of levels, as well as with low inventory. We need to remember, though, is we're still on the inventory side a little bit below the pre-pandemic levels. And what this means to you is homes are still sitting a little bit longer, but we're also starting to see a little bit of price cuts coming up too. So, and the real estate experts I've been talking to in the industry have seen sellers a little more willing to offer some flexibility as far as maybe helping out with closing costs when offers are made, maybe helping out by lowering the sales price. Where you're at, Greg, what have you kind of seen going on in the world of real estate there? Have you seen much movement in the market where you're at? Because you're over there in Kentucky.
Yeah, their houses are sitting a little longer, and I am seeing a lot more reduced signs. I don't go looking online, just from traveling around town in the neighborhood signs you see, but still selling. But really, I think our market's a lot of people move from out west, selling for millions and buying here for $250,000 or whatever. But yeah, there's houses they're still selling, just taking a little longer, a little cheaper.
Yeah. That's the good thing is I think as we move through these cycles, we're going to get a little more balancing out. We're going to get a little more inventory to normal levels where it needs to be, which will put it back into a market where you'll still be able to sell your home and not really shouldn't have to worry about too much as far as taking too big of a hit, but be able to get a little more affordability as far as from the buyer's side. And now I'd like to get into the next subject here, talking about interest rates and mortgage rates. And I know right now that seems to be everybody's favorite subject, especially what's going on with the Federal Reserve and when are they going to lower rates? What are they going to do in their next meeting? And as of last week, the average 30-year fixed rate mortgage was hovering around 7.22%. You know, something I want to stress to folks to remember is when interest rates are in the sixes and sevens, that's more of a historical average of what mortgage rates truly are. And a lot of us got spoiled, me included, being in the mortgage industry when interest rates were in the 2s and 3s and 4s. And I think a lot of that too is what led to the rapid, appreciation that we saw in real estate. When you're getting interest rates that are 2.5%, 3%, you can buy a whole lot more house, which of course then sellers, as the demand increased, started raising the price and people were willing to pay it. We've got a lot of experts that believe we may see some softening into the high sixes this summer. But once again, that is never guaranteed. I don't have a crystal ball to tell you what the future is going to hold for real estate interest rates. However, I can tell you what we're seeing in the trends, and I keep an eye on what's happening in the markets. And one of the key insights people need to look at when wanting to understand where interest rates are going, a lot of people look at what the Federal Reserve is doing with the interest rates. The problem with that is the Fed's interest rate are the short-term interest rates that typically do not have much bearing upon what's happening to the long-term interest rates, which are the mortgage rates. And where you want to get a better understanding of what's going on with that is you really want to look at what's happening with the 10-year Treasury, because that typically, and I'm going to pull up today's 10-year Treasury. This is live as we are broadcasting here now, showing where the 10-year Treasury is at, 4.179%, and it's trending in a downward direction, which is good. We've had a downward direction most of this week, which is very beneficial for interest rates. When the yield goes up, the mortgage rates go up. When it drops, rates often drop. Here's what you need to remember, though. It's a very good barometer to see what's happening. It's a very good measuring stick to see what's happening with interest rates, but it is not a guarantee. And Greg, how many times have we seen everything being turned upside down in this market over the past year to go, what the heck is going on? We should be seeing rates lowering, and they're going through the roof.
Yeah, there's a total disconnect between markets and economy with all this stuff. And you're exactly right. The bond, there's sayings out there tell it to the bond market. Basically, that's what determines what you're talking about with the rates. And it appears to be in a downtrend, but man, that can change on a dime. Everybody's so emotional about tariffs and all kinds of other just junk that doesn't really affect anything. It's all about patterns and probabilities with what they call technical analysis. That's why you can watch a guy and he'll tell you, well, it's going to go up or it's going to go down or it's going to do this, and they'll really give you an answer because nobody really knows. But hopefully it will continue to trend down, which will be good for your home buyers.
Exactly. And I tell people this all the time. Yes, I have a good idea and analytics that I use, things that I look at, insiders that I speak to get a better idea of where the market is moving. But at the end of the day, there's just no way to predict it 100% and say this is where it's going to go.
Yeah, that's part of the problem. The 10-year yield's supposed to be stable, but it's been very volatile, especially the last year or so. I mean, it's not supposed to be doing that. So it makes it very difficult to get the rates you're looking for.
Well, I've been showing a lot of people that we've been looking at it. It's had a lot of movement. I mean, just at a very large movement, and this is not the normal one I like to look at that gives me, that's the 1 day. Let's look at this past 6 months, and we can see the volatility here.
Yeah, that's not supposed to happen
Yeah.
with the 10-year yield. That's supposed to be generally, if you have huge spikes or huge dumps in a rapid period of time, that's huge amount of trouble for an economy. So that's why we're going through what we're going through. That's part of the issue.
Well, I have a client that I'm working with now. I have multiple clients I'm working with now, and we were talking about the interest rates and going over everything. And I've been advising my clients right now, if you're looking at purchasing a home and you're under contract on a home, if you want the security and not have to stress over what is going to happen with the rates, just go ahead and lock your interest rate in and let's get everything else taken care of so we can go through the loan process and you can move into your home in a timely manner. If we're wanting to watch the market a little bit, I've been noticing we've really been more like a bouncing ball. And you can see that here just from what we're looking at here with it since November 2024 all the way up to today. You've got your Boeing bouncing up, coming back down, bouncing back up. And we can try to go ahead and grab it at the right opportunity. But once again, there's no guarantee that you're going to grab it at the right time.
Yeah. Nobody knows what that thing's going to do. It's out of our hands.
Make it easier, because if I had a crystal ball to be able to tell people what interest rates are going to do, I'd have a very nice private island somewhere that I could reside on from time to time. I'd have a nice home in the area of town where only the elites get to live in.
Yep. Exactly. Bottom line is everybody thinks they know, but nobody knows anything, including myself. You just got to look at trends and probabilities. That's the only advantage you can gain.
Exactly. Now I'd like to get into FHA student loans, because that has FHA loan along with student loan updates, because student loans have definitely been in the media lately, because in this, once again, we are not trying to get political here. We're just bringing the facts of what's going on and telling you what's happening because of what elected officials have done and are doing. A lot of folks were not having to, quote unquote, make payments on their student loans for quite some time. Well, now we've got that time has passed, and they're starting to have to make payments again on these student loans. Here's something what I want everybody to understand. Even during the last administration, when you didn't have to make payments on your student loans, if we were getting an FHA loan, I still had to count a certain percentage of that total debt amount of your student loans and calculate a payment and use that against your debt to income ratio, because from the lender standpoint and from FHA standpoints, one, student loans cannot go away until you pay them off. Bankruptcy. Can bankruptcy get rid of student loans, Mr. West?
They cannot.
Student loans will haunt you till you'll die. And from what I've
loaned, you're stuck.
Yeah, which is why we count them. Now, FHA used to count 1% of the loan balance. The good news is there was some changes. There have been some changes. So we're only counting 0.50% of the total balance. Another thing that we can do, and this is what I've advised to a lot of people in the past when I've been helping them and we ran into the student loans, was if my borrower calls the student loan company where the student loan is with and says, look, I don't want to start making payments now, but when my loan comes out of deferment, show me what my payments will be at the bottom line minimum. as long as I have something from the lender that has your student loan and you can get me a documentation of that, I can use that payment versus having to calculate it at the 0.5% of the total balance. And in a lot of situations, that really puts people in a much better position and allows us to be able to help them with the loan.
From a credit perspective, I'll tell people now that I've had at least 3 I think of in the last month where they've had 30 and 60-day lates appear from student loans because they weren't even made aware that they're supposed to be paying them back. These companies are not reaching out to people very effectively. So I would highly recommend, if you have loans, you need to be proactive and reach out and find out what's going on before you get wrecked with some late payments.
Well, thank you for letting us know that, Greg. That's very important to know. So what you're seeing is these student loan companies, now that they're back in business and have been told you can go start collecting after people now, they're not bothering to pick up the phone or really give people notice of, hey, it's time to start paying again, are they?
No, not all of them. And that's one advantage. That's part of when I do these shows, I try to get where I'm getting a lot of questions from, which is why we're bringing up debt later. I'm usually helping out several hundred people at a time. So I get a pretty good demographic of what's going on. And that has popped up more than once. So I know it's a trend of some sort going on.
And that's something very important too, because guess what? Student loan debt is a government debt. And guess what? FHA loans are a government loan. And if we've got a problem with your government loan for the student loan debt, we're going to have a problem being able to give you a FHA loan, which is typically what the majority of first-time home buyers are using or are using to get into their first home, because it helps if they have some credit challenges in the past. It also helps with a much lower down payment, and the private mortgage insurance is typically lower for people that have below a 760 credit score. It's a great first-time home buyer tool. And we're not going to get into this in this show today. We will in a future show. But do you know what the average age of the first-time home buyer is today in 2024 and 2025, Greg?
I would get, I don't know, 28, 29 maybe.
That's what it used to be in the 20s. Now it's about 38.
Wow. No, I did not know that.
Yeah, it has dramatically risen over the past several years.
Wow.
Yeah.
Well, that's not a good sign. Usually you make more money as you get older, and it's taking longer to get your house, I guess, because of the prices. Yeah.
And we've seen a lot of fluctuation. And we're going to get into throughout this year, we're going to be doing more shows really diving into what is really happening in the true cost of buying a home. I had a nice young couple that I was working with this week, and they were wanting to make an offer on a home that they really liked. And I sent them their pass go approval letter. They were good to go. But I was telling both of them, I said, look, please, let's get an insurance quote first before you make the offer, because the world of insurance has changed. And in the very near one of my upcoming shows this year, I'm going to have an insurance expert on here that's going to get into the nuts and bolts of what's happening in the insurance industry and some of the reasons why we've seen such an increase in that. But with all of that said, they got the quote back and found out what the insurance was going to be and looked at the numbers and said, John, we're not comfortable with these numbers. Which is why I stress to people the importance of making sure, whether it's me, and I hope it's me as your mortgage expert, there to help you with your home financing needs. You want someone who's going to sit down, take the time to go over everything with you, because there's much more to a mortgage than just your principal and interest payment. You have taxes, you have insurance, and with the system that I created last year called the Human Touch Mortgage Solutions System, I'm able to bring people into my office without them having to fight through traffic, sit down virtually with me as if they were sitting in my office, and get a very clear, full understanding of what their loan options are. And it allows people to make an informed decision. And my clients were very, very grateful for all that I was able to share with them, because it kept them, as they told me, it kept them from getting under contract, paying for inspections, even possibly paying for an appraisal, and then finding out, oh my goodness, the insurance is much more than we're comfortable with, and then having to back out of the transaction and possibly losing their earnest money.
Yeah, it's huge.
Yeah, it's 2025. You need to fully understand what's happening. But with all that said, let's have a little fun here. I would like to talk about this nice, beautiful home here. This home is in the Montrose area. That's a very nice part of town here in the Houston area, Mr. West.
Mm-hmm.
And it's actually a really cool looking house. $2.5 million, and it's on sale. So, Mr. West, are you and Mrs. West looking to make a move or an opportunity here in the Houston area? Here's a fantastic home that is very unique and interesting. I think you too. Look, you've got the 1970s, 1960 looking fireplace there. I think that looks cool. I like it.
Yeah, I think I'll have to pass on that offer. What would that payment be? 50,000?
Oh, I don't even want to start trying to quote payments, especially here on YouTube, because we have to get into all the legal disclaimers when payments are quoted. So I would rather not do that at this time, sir. But with all of that said, I would like to move into, I know we were going to dig into some very important stuff with you, Mr. West. Just to let everybody know, Greg West is a nationally recognized credit expert and the founder of West Credit Services. He's helped thousands of people repair, rebuild, and master their credit. And he's here today to drop some real-world, real-time advice on how credit score could be helping you or hurting you. Greg, let's dive into it. And I know one of the things you and I were talking about yesterday for today's show, you wanted to get into the top 3 things hurting buyers' credit scores in 2025.
Well, it's something we've talked about before, and it's an obvious thing, but it needs to be repeated because it still, unfortunately, happens frequently. And it's 2 of the top 3 parts of the influence your score, which is one, of course, making your payments on time. Now, you can be, not that you want to be, but you can be a day or 2 late. It's not until you hit 30-day late to where, like, say you have a payment due May 1st.
Mm-hmm.
Once it hits June 1st, if you haven't paid May, that's when that 30-day late is going to end up hitting your credit. So don't panic if you're a day or 2 late, but that's 35% of the score. So one 30-day late, I mean, you'll drop 100 points overnight. So that's one of the most important things. Secondly is credit card debt. And it's at all-time highs, I believe, as far as with consumers. I think even more so than 2008. And the defaults are starting to head in the same direction. And I get it, man. It's tough out there. But if you're racking it up, I've got a couple good examples. I'm going to backtrack. These are personal examples because I deal directly with so many clients that I know exact numbers, so I can give you exact percentages of things that can happen if you run up debt or pay it off. One was a seasoned credit holder, had about a 15, 20-year credit history, and their credit card utilization was in the 80% percentile, like 85, 88%. And that was in February of this year. They paid it down, got a bunch of money from whatever, paid it down to 12% by the end of March. That season score on that person went from 685 to 801.
Whoa.
In 2 months' time, because credit card debt is 30% of the score, the utilization that you have. So
just from going to 85% utilization, dropping down to 12%, move their score that much.
It did. Yeah.
Wow.
And I got the numbers and facts to prove it. Anybody that calls me on it, it just that's one of the things when my clients enroll in is that they get the free FICO score through the Experian app, and we kind of keep track of things that way as well. It is delayed, but at least it lets you know kind of what's going on. Um, Another story as far as going down. And I know a lot of experts out there will tell you to keep your credit card debt at 30% or less, but I say 10% or less because I've seen another example of someone who was at 8% credit card utilization, which is good, had some things come up, went up to 22% utilization, which is still good in a 2 month time frame, and the score dropped 40 points from that. So basically, when you hit a threshold of 10%, then 20, 30, every 10%, you're taking a hit, which means every 10% you pay down, you can get a boost. Um, so
Now,
it's
we
critical.
both know this because in a lot of cases, when I have clients come to me that have a lower score than they think they should have, and they were like, oh, I thought I was at this score, and they're a little bit lower, a lot of times with paying the correct amount down on certain credit card accounts, we can elevate their scores quite a
Sure.
bit in some cases.
Yeah.
We've been able to do that.
Yeah. It's well, they don't like to see any cards above 50%, and then your whole utilization's the 10, 20, 30% when we're talking about. But and another thing, because this happens frequently, especially with business owners, they'll charge up their cards and then pay them off all at once. Well, if you don't pay it early, what's happening is this: if you have a $10,000 limit, you're charging up $8,000 worth of gas because you're a truck driver or whatever. Comes due, you pay the 8,000. Your credit's still getting smacked down because it's showing you at 80% utilization. Even though you paid it down to zero, it's not going to register till the next monthly bill, which again, you'll run it back up. So I would recommend, if you're in a situation like that, pay it off online earlier before the bill even comes. That way, a smaller amount's recorded and your utilization won't take such a hit, and your score should stay more steady like that. If not, it's going to be fluctuating all over the place.
Exactly. And credit score has so much to do in today's time, especially if you're looking at a conventional mortgage and you're going to need to have private mortgage insurance. And that's another thing that a lot of people are not aware of is part of what your private mortgage insurance payment is and the rate is based on for the private mortgage insurance is your, of course, loan to value, but also your credit score. And in today's times, especially starting through 2020 and beyond, a lot of rules came into effect, and we'll get into that in another show, that has really made it to where you want to have the highest credit score possible. There used to be a time, Greg, it wasn't too long ago. Remember, hey, if you've got a 700, 720 score, you're good. You don't have to worry about anything. It's not that way anymore.
No, I actually, and that's the third part I was going to mention was inquiries, I didn't really pay a lot of attention to because they're only 10% of the score. And you'll get these little red flags saying you've had too many inquiries when you only get like 2 or 3 in a 6 month time frame or whatever. But now, and this is again a personal client, score was 787. And I wanted them to get a higher quality credit card with more than 5,000 limit because it has a bigger impact. And they were denied, and I was shocked. And I had them send me the denial letter, and the only reason why is because they had recently purchased a car and had like a bunch of inquiries on there. That was the whole reason for denial. There was no other reason given other than inquiries. So I think these companies are skittish with all the defaults and debts, so they're tightening up lending a little bit. So yeah, if you plan on buying a house, don't go buying a bunch of stuff and getting a bunch of inquiries ahead of time.
Exactly. And it's multiple inquiries from different types of inquiries like mortgage, car, credit card, and those things are, you want to make sure that you're not doing that, especially during the mortgage process, because it's when you're applying for different types of credit is what really has a negative effect on your credit score. Not just applying for a mortgage, that really doesn't do anything, because I know that's a big myth out there. And we've talked about that before too. Applying for a mortgage, as long as you don't have a lot of credit challenges or haven't just applied for an automobile loan or a credit card loan or any other type of loan besides a mortgage loan, it's really not going to have much effect. And if you're a person that has good credit, a couple point hit is really not going to do much to you at all. Well, with that said, Mr. West, I know you wanted to talk about something that I'm sure is on a lot of people's mind, zombies.
Yeah, a bunch of them walking around, but no, zombie debt.
Oh, zombie dead. I'm sorry. So I have to remember to read the rest of the story. Now I'm dating myself, sir. I apologize.
This is another thing that in the last month I've had more questions and questions from people just getting these random bills in the mail or random phone calls or now texts even. And the first thing I'll do when they send them to me is I look up on their reports is how old they are.
Mm-hmm.
Social media and the internet has a lot of good information regarding debt and credit, but it can be information overload, and you can't take one source at its word because as far as credit and debt is two different things. So zombie debt is described as a credit that's no longer collectible or debt collectible due to statute of limitations. Well, it depends on what state you live in, is how many years you have to wait. It can be anywhere from 3 up to 15, depending on the type of debt that it is and where you live. I'm going to use Pennsylvania as an example because I have a lot of clients up in there, but I know up there it's a 4-year statute of limitations to collect a debt. So once it hits 4 years old, it's no longer collectible. But it's still on the credit report because credit reporting is different. Credit reporting statute of limitations is federal. It's every state's the same. It's a 7-year statute. So what I would recommend if you get these things, first off, see how old the debt is. And I would never, ever pay anything over the phone, text, email. Have them, you don't even have to talk to these clowns. Just tell them to send you a bill in the mail. If they don't have the information to even do that, then you got nothing to worry about as far as being sued or whatever. And if they do try to sue you, of course, show up in court. You have a statute of limitations defense, especially if it's past where it's supposed to be. But just don't get rattled because there are more people getting these because of the times we're in. Companies are getting desperate. They're going after people they haven't talked to in years. And no honor among thieves. They're selling debts to other collection agencies they know they can't collect. And now the new guy's got it and trying to harass you. And it does not, and it may show up new on your credit report, but it still has to be backdated to the original date of delinquency. So don't worry, don't let them tell you, well, it's going to be on your credit report for 7 more years because it's not. Basically, anything a bill collector tells you is probably a lie.
No, you don't say so, sir.
That?
I mean, kind of like a politician. Oh,
shocking.
Well,
that was the main thing I wanted to address. It's happening frequently, and people take text more as real for some reason than they do email and phone calls now.
Oh, okay. Well, Greg, I want to give a huge thank you to being here today with these insights. And to my audience, I hope you all caught the gems that Greg was dropping about the zombie debt and what you need to do to position yourself as a buyer in this market. These are some huge things that are we're going through a lot of changes right now in the market. And I've been in real estate since 1999 and mortgages since 99. Actually, we got into real estate in the mid 90s. But when I really started becoming professional and worked on my craft in the mortgage industry, it was 1999. And if you talk to any real estate expert, mortgage professional like myself, we're going to tell you, change is always happening in our industry. Always. Well, Greg, before I say goodbye to you and put you back in the green room, would you please do me a favor and let my audience know, because I know because you're a guest of mine on the show, every month we do our news segment on the last Wednesday of every month to really give people some insight on what's happening in mortgages, real estate, and credit. Can you please give people your contact information so they can reach out to you and schedule a free consultation with you?
Sure. Numbers, you can call me at 859-625-4546. If I don't answer, leave a voicemail, and I do check it. You'll get a return call fairly quick. You can also go to westcreditservices.com. And I should have sent you my QR code. But,
yes, for next show, please do. Actually, yes. What I'll do is I'll put it in the replay of this online and on Facebook. I'll put your QR code in there so people...
That way they can scan it with their phone. Boom, takes them right to the right page with westcreditservices.com. Free consult. And if I can't help you, I'll push you in the direction of somebody that can.
Perfect. Well, Mr. West, I really appreciate you. I'm going to put you back in the green room for a moment and want to tell everybody thank you very much for being here today. Really appreciate it if you would like, subscribe, and share. And whether you're thinking about buying a home this summer or in the next 6 months from now, the key is to starting smart and starting early. And right now, I'm offering a free 15-minute face-to-face personal loan consultation through my Human Touch Mortgage Solutions system. It's a virtual experience that makes you feel like you're sitting right across the desk from me, like we are here now. There's going to be a link down in here. You can easily go and book that appointment with me. But until next time, please, everyone, have a great day. And once again, this has been Real Talk with Real Estate Pros, and we will see you here next week.